The UK economy has experienced a major shock in the recent months. Three major events have happened that can put one of the world's most powerful economies on its knees. The effects of these events will continue to damage the UK economy and every economy in Europe. First, the British pound is crashing. The once mighty currency is losing its value faster than the Treasury implements crisis-preventing measures. Second, winter is coming. Temperatures are slowly going down and people are starting to freeze in their homes. Sustaining the comfortable living conditions gets harder and harder every day. Third, Russia has cut off the gas supply to Europe and the energy prices have reached the all-time high. Seemingly full gas storages will quickly run empty if the temperatures drop even slightly lower than accounted for. It definitely is not looking great for the UK economy, but is there a way out? We think the UK has only two escape options, so listen carefully to fully understand the predicament the UK is in. This September, Russia has cut off gas supply via the Nord Stream 1 indefinitely. This political move, which it truly is, was quickly accompanied by the info about leaks in the pipes. Sounds sketchy, right? The Nord Stream 1 pipeline usually supplied about 35% of all the gas Europe was buying from Russia. Nominally, this 1,200-kilometer pipeline is capable of pumping a maximum of 170 million cubic meters of gas per day. But in June, Russia has reduced the delivery for the pipeline by 75% from 170 million cubic meters a day to measly 40 million cubic meters. In July, Russia shut the supply for 10 days, claiming the need for maintenance. And when the supply was resumed, it halved to 20 million cubic meters, and then it was halted completely. A few days after the supply was stopped, Russian officials stated that gas supplies to Europe won't be resumed until the sanctions are lifted. This poses a serious issue for the UK energy system, since gas is crucial for keeping the people warm and happy. Great Britain is currently looking for new ways to buy gas. The UK relies on imported gas to meet around half of its demand, with Norway the top supplier, accounting for some two-thirds of the UK's imports last year, according to government data. Reportedly, the US can become Britain's new gas supplier, as two countries are nearing a deal. This so-called energy security partnership allows the US to sell as much as 10 billion cubic meters of liquefied natural gas to the UK over the next year. Earlier this year, America pledged to supply Europe with 15 billion cubic meters of LNG. Now, it is unclear whether all the papers will be signed, but this deal should help inject much-needed energy supply into the country, which is for sure nearing a severe energy crisis. The Office of Gas and Electricity Markets, aka Ofgem, has recently said that the UK is facing a significant risk of gas shortages this winter, entering a gas supply emergency. This can mean that gas-fired power stations, which account for around 40% of a country's electricity production, may see noticeable decreases in supplies. Many countries are affected by the energy crisis, but the UK particularly exposed to increases in gas prices for a number of reasons. First, around 80% of households use gas boilers to heat their homes, and around 40% of electricity is generated in gas-fired power stations. Second, these are higher proportions than other European countries. Third, houses in the UK are poorly insulated compared to elsewhere on the continent. Recent analysis from the IMF showed that UK households have been the worst hit in Western Europe in terms of the impacts on spending power. Last winter, annual energy bills for the typical household were around £1,000. Before recent policy announcements, these were set to rise to over £3,500 in October 2022 and were expected to exceed 5,000 in 2023. The National Energy Action has calculated that last October, 4.5 million UK households were in fuel poverty and estimates that now there are 6.7 million. More households in fuel poverty mean more people in debt, unable to pay their energy bills, forced to cut back on essentials. It means rationing heating to unhealthy levels. People in the UK are used to wearing warm clothes in winter, but the upcoming crisis can can put thousands of lives at risk. National Energy Action Chief Executive Adam Soares said, 10,000 people die every year in the UK directly because of a cold home. That number is going to skyrocket. We are going to have another cold homes epidemic across the UK. It has a cost in mental health and ill health. Mr. Soares warned the new price rise was a disaster that could plunge 9 million households into fuel poverty, which occurs when a household spends more than 10% of its income on power bills. Add to it the rise in inflation, which reached 10.1% in September, and now it is over 11.1%, a 41-year high. The price of food and non-alcoholic drinks rose by 16.2% in the year to October, up from 14.5% in September. Pay increases for many people aren't keeping up with rising prices. According to official figures, average wages, not including bonuses, rose by 5.7% in the 3 months to September 2022, compared with the same period in 2021. But overall, once inflation is taken into account, average pay actually fell by 2.7%. The future looks really grim for British people. The only way for the UK Treasury to fight that inflation is to increase borrowings, and since the country has borrowed a lot during the pandemic, every new borrowing has a significant impact on the value of pound. The British pound sterling is the former global reserve currency and one of the world's strongest by value. GBP is the 4th most traded currency on the forex markets, which reflects the UK's role as the world's 5th largest economy and a major financial center. The pound was in decline against the US dollar since 2014, when it did cost $1.7. In 2015, its value fell to $1.5, and after Brexit in 2016, it fell down even more to $1.23. Afterwards, there were ups and downs, rises and falls, but now the pound is at its lowest in almost 40 years. At the end of September, the pound almost reached parity with the US dollar, valuing only at $1.035 before recovering a bit. Multiple factors have influenced the value drop, and most of them cannot be resolved on a moment's notice. In late September, the government decided to cut taxes without announcing any plans to compensate for the loss of revenue. As tax cuts were introduced, the yields on bonds have increased by 35 points, making it the biggest record ever recorded. This decision has planted a seed of insecurity into investors' minds, and shortly after, many investors have sold their British assets in high volumes. Consequently, the pound fell in value by 3.2%. With the UK hitting a record debt to GDP ratio, the pound is vulnerable to a downward revision if foreign investors are reluctant to fund the deficit, and markets are clearly very doubtful of the ability of this government to manage debt. Additionally, the Bank of England is seen by many as lagging behind, unable to deal with the inflation. In September, it increased the interest rates by 0.5%, totaling at 2.25%. When compared to radical moves of the America's Federal Reserve and their 0.75% increases, the British bank does look slow to react. Investors predict the increase up to 6% by the end of the year, which may pose another problem: too steep an increase. Rising borrowing costs can make it more expensive for the government to pay its debts to service them. Analysts at Bank of America say there are the chances of a feedback loop, that a weaker currency leads to higher inflation, a higher bond yield and more government borrowing, and then repeat. The Bank of England raising interest rates above 5% would have a massive impact for households and businesses, with many consumers having only experienced rates close to zero over the past decade. If mortgage rates rise to 6%, the average household refinancing a 2-year fixed-rate mortgage in the first half of 2023 would face a jump in monthly repayments to £1,500 from £863. The extra bank holiday for Queen Elizabeth II's funeral on September 19 also played a role, as some businesses closed or adjusted their operations that day. The Bank of England has projected that the UK is at the beginning of its longest recession on record, and the Office for National Statistics confirmed on Friday that GDP contracted by 0.2% in the third quarter of 2022. Weak economic growth piles pressure on the UK government as it tries to restore credibility with investors following a run on the pound and a bond market crash in September. So what can the British government do about that? Are there any escape routes? We think the government has only two options now. First, lift the sanctions, get cheap gas, but but lose the credit among other nations. And second, continue to do what they do, become more dependent on the US, and hope it won't mess things up. Can America be affected? Absolutely, but not in the direct way. You see, countries don't have that much trade of goods between them, but financial ties are far greater than trading ones. London is the heart of Europe's economy and is home to one of the world's largest stock markets. So if the country plummets into a spiral of recession, all the money that America's investors have been pouring into the UK economy for years will be in danger. Billions and billions of pounds worth of agreements and partnerships will go to waste. If the UK economy dies, it can become a spark that will ignite the fire of the US recession. But what to do? First, hold on to cash. You will need it in the upcoming year or years. The markets are extremely volatile these days, so making the right decision is really hard unless you are a trader and willing to take such risks. Or if you are a long-term investor and have been investing for years, keep on investing a part of your income to markets. But if you haven't been investing and you want to start investing, my suggestion is still wait. We don't know yet whether we've bottomed or not, so a better strategy is to wait and see what markets are gonna do. But really, that's a topic for another video. And second, work harder on your thing than ever before and start learning new skills if you haven't yet, because new times require new skills. You will need them and they will save you in the nearest future. Investing in yourself is really the best thing you can do right now. Anyways, if you want a separate video on this topic, on the new skills and new jobs that will be in demand in 2023, smash that like button and let me know in the comments below. Thank you very much for watching and see you guys in the next one.